Polygon integrates Gelato Network, bringing smart contract automation for its users. Umbrella Network's decentralized oracles are live on Polygon, allowing access to a wide range of data feeds. MATIC price has entered a crucial zone, a bounce from which seems likely. MATIC price seems to be holding up quite well, considering the selling frenzy gripping the cryptocurrency market, while Polygon continues to make headway with its adoption. Polygon builds ties with Gelato and Umbrella Network. Polygon is an example of an L2 scaling solution that has been on a tear when it comes to adoption. With a plethora of partnerships under its belt, Polygon recently announced an integration of Gelato Network's automation abilities, which will further help the users and developers of both the communities, increasing efficiency in transactions, costs, and speed. Combining Gelato's automated smart contract execution and Polygon's scaling solutions, many centralized tools can now be implemented on Polygon native products at a fraction of the cost. Sandeep Nailwal, co-founder of Polygon, stated, "We are excited to have Gelato on board. They are really pushing the boundaries of what once was thought possible for automation on Ethereum. It only makes sense to bring that capability to Polygon for the benefit of our projects and users." Additionally, MATIC announced ties with Umbrella Network, a scalable, cost-efficient, and community-owned oracle. With DeFi booming right now, projects, developers, and users require quick, reliable, and tamper-proof data, which has given rise to plenty of oracle blockchains. With this partnership, Polygon users will leverage decentralized oracles on its network via Umbrella Network's Layer 2 oracle solutions, allowing them to access critical real-world data, including crypto asset prices, contract information, third-party data, and so on. MATIC price at critical level. MATIC price shows a breach of the 50 Simple Moving Average, SMA, on the daily chart, which has resulted in a 15% decline, tapping 29.5 cents. Interestingly, this level coincides with the supertrend indicator's buy signal that flashed on January 4th. In doing so, MATIC price has pierced the 12-hour demand zone that extends from 28 cents to 33 cents. While the sell-off seems to be waning, a decisive close above 34 cents would be bullish for Polygon and promote a 22% upswing to the recent swing high at 42 cents. If the crash continues, leading to a breakdown of the supertrend indicator's buy signal, followed by the demand zone's lower trend line, a steep correction awaits MATIC price. In such a scenario, the supertrend indicator would trigger a sell signal, last seen nearly 4 months ago. This move might extend the correction to the subsequent demand zone's upper layer at 22.9 cents.
If you're going to make $100,000 a year for the next decade, and if the US dollar is going to weaken at 15% a year, you should discount your cash flows by 15% next year, by 30% the next year, by 15 and 15 cubed, right, the next year, and by 15% to the 10th power the 10th year. It isn't a hard sequence to figure out, right? Your purchasing power is going exponentially to zero. All you got to do is fill in what is the percentage weakness of the money to figure out what your purchasing power is going to be. This is the same math you would do for an individual dentist or an engineer or a small business or a large business. Or a bond, if you held a bond and the bond's paying you $100,000 a year, right? It's the same exact math. It's just discounted cash flow. Once you figure that out, then the question is, what are the consequences of me continuing to work in the US dollar? The answer is you have to basically grow your salary faster than the rate at which the currency collapses. So if you can raise your salary 15% a year every year forever, then you'll have the same amount of money in 10 years as you have now. By the way, you won't get rich.
Yeah,
you'll be getting paid $1 million a year at some point, and it will buy you nothing. But that's one strategy. The other strategy is you convert your existing assets. Should be fortunate, if you are fortunate enough to have assets invested in bonds, commercial real estate, or equities that are valued on cash flows or sitting as cash in the bank, you convert that into the hard asset, which is Bitcoin, as much as you dare. Some people say 5%, some people say more. I've done 400%. My view is first I convert all my stuff, then I borrow money, then I convert that. But everybody makes the decision as to how invested they want to be in the digital asset universe versus the analog asset. Once you do that, after you decide what portion of your existing assets you should convert, you can decide if you want to forward finance your cash flows. And if you can, and maybe you do. I did, but you know. Then you decide you want to finance your other assets. Like you have a house, you have $1 million house, you can borrow $800,000 of it. Maybe you can borrow an $800,000 home equity line at 2.5% interest. Well, if I borrow $800,000, pay 2.5% interest, invested in Bitcoin, paying 250% interest, it's a 247% arbitrage, right?
Yeah, it's a great deal.
Okay, like some people are afraid to do that, you know? I would say, well, you get to borrow money against your house to buy a dominant digital monetary network growing more than 200% a year. It's got a monopoly on money that should grow by a factor of 100. Sounds to me like a better, by the way, the same people that are afraid to do that will start up their own business to complete the next Snapchat. It seems to me like creating the next Snapchat's a lot more risky than buying a piece of a monopoly digital network that's more powerful and, you know, more useful to everybody on earth than anything ever invented in your lifetime. But everybody assesses risk differently, right? Our brains are wired differently. I think if I was giving advice to my niece, I would say, you know, if you can finance your house, finance your house if you're lucky enough to have it. If you have if you can sell equity in yourself or in your business, you want to sell equity in your business, okay, good idea, invest in something related to Bitcoin because it's growing by a factor of 100. Better idea, buy some Bitcoin with the money and then borrow against the Bitcoin to invest in the thing that you think is cool, because there's a 99% chance that a new business fails, but in the 99% probability that your Snapchat substitute fails or your TikTok competitor fails, if you finance the business in Bitcoin instead of in US dollars while you were failing, you're going to get rich.